Stocks in the US ended with modest gains, modest losses, pulling back from their earlier highs. This comes after the US Federal Reserve implemented a larger than expected interest rate cut of 50 basis points, marking its first rate reduction in over 4 years. The decision had investors reacting with cautious optimism, reflecting on how the Fed's move might shape future market conditions.
U.S. stocks closed down in choppy trading on Wednesday after the Federal Reserve cut interest rates by a relatively hefty half percentage point. The Dow, S&P 500, and NASDAQ each lost between 1/4 and 1/3%. The Fed's announcement initially sent the indexes climbing, with the S&P and Dow hitting intraday highs.
Bravo, Jay Powell. Bravo.
Eric Ditton, president and managing director of the Wealth Alliance, cheered the Fed's decision, but believes the central bank should have acted sooner.
I've been really a champion of Jay Powell. I've been saying the Fed's medicine's working. I've seen inflation come down, but I really wanted him to cut last month, and he didn't. And so I would have been upset and disappointed if he came in at 25 bips. He came in at 50, 100%. That is the right move, and we're just beginning.
Markets are now fully pricing in a cut of at least 25 basis points at the Fed's November meeting, with a roughly 35% chance for another 50 basis point cut. Small cap stocks, seen as more likely to benefit from a lower interest rate environment, moved higher, with the Russell 2000 index outperforming the S&P 500. Regional banks, some of which had been stressed by higher interest rates, also gained ground, with the KBW Regional Bank Index jumping as much as 3.5% before closing up about 0.5%. Other notable movers included shares of Intuitive Machines, which surged more than 38% after the company clinched a $4.8 billion navigation services contract from NASA.